Take a deep breath. Can you smell it? It's not the smell of money, as you've always been promised in Hollywood movies about Wall Street. It's the sweet, cloying scent of overcooked popcorn and cheap perfume. You're in a huge, dark movie theater. The air is stale, air-conditioned to a sterile chill, but it carries the heavy tension of 1,000 heated bodies. The chairs are soft, velvety. They embrace you, lull you, make you relax your muscles and forget about what's happening outside the walls of this theater. People are sitting around you, thousands of them, hundreds of thousands, millions. They, like you, are leaning back in their chairs, their pupils dilated, their faces illuminated by the deathly pale light pouring from the giant screen. They are smiling, they are chewing, they are absolutely, totally calm. There's no blockbuster movie on the screen. There are no actors on the screen. There's only one endless, hypnotic green line creeping up. It's creeping up today. It was creeping up yesterday. It's been creeping up for 15 years straight. That line is the only reality you know. You've been told that as long as you sit in this chair and don't move, you'll get rich. You've been told that a ticket to this movie theater will guarantee you a comfortable retirement, a house by the ocean, and college tuition for your grandchildren. All you have to do is sit. Don't think. Don't analyze. Don't ask questions. Just buy a ticket, sit in the crowd, and watch that green line. It's called passive investing. It's called the new financial religion of the 21st century. And right now, at this very second, that religion is preparing the largest mass ritual sacrifice in human history. Because you can't see what's happening in the darkness, right at the floor. You're too mesmerized by the screen to notice the thin trickle of gray, acrid smoke seeping from under the baseboards. You don't hear the overheated pipes bursting somewhere deep in the basement. And most importantly, you don't know that the steel fire doors, marked with reassuring green signs, were actually welded shut from the outside 3 years ago. No one is going to let you out. This movie theater wasn't built for you to watch a movie and leave. It was built to gather you all in one place, lock you in, and burn you, along with your money. Let me turn off the projector and turn on the lights. Let's face it before the smoke fills your lungs. What you call the market rally of recent years isn't economics. It's a mass hallucination. You've been sold the idea that you can stop thinking and still win. Financial advisors, bank tellers, smiling YouTube gurus, they've all been telling you the same mantra. Just buy the index. Just buy the whole market. Don't look for a needle in a haystack. Buy the whole haystack. Sounds logical, right? Sounds safe. Sounds like the wisdom of the ages. But in reality, it's a lie that will cost you everything. The system's algorithms are set to hide such videos, so subscribe and like now. It's the only way to ensure the next warning reaches you before disaster strikes. Leave a comment if you're ready to learn what others aren't telling you. When you buy an index fund or a popular exchange-traded fund, you think you're becoming a co-owner of the best businesses on the planet. You think you're buying a piece of Apple, a slice of Microsoft, a piece of Nvidia. You think you're an investor. You're wrong. You're not an investor. You're a parasite. No offense, it's a biological term. Passive investing is parasitizing on the price-determining mechanism. Think of the market as a living organism that decides every day how much a company is truly worth. For this organism to live, active cells are needed. People who study reports, debate, take risks, bet on success or failure. They're the ones who shape prices. But over the past 20 years, the active cells have died out. They have been replaced by you, the passive biomass. Today, over 50% of all the money in the US stock market is managed by robots that don't even look at the price. They don't care whether a share is worth $100 or $100,000. If you give them your money, they're obligated to buy. Dumbly, mechanically, mindlessly. This has created a monstrous, vicious cycle. You give money to a fund. The fund buys shares of the biggest companies. The shares rise simply because they were bought. This rise attracts even more people like you. And you give even more money. This isn't business growth. It's inflating a bubble through a straw inserted directly into the vein of the economy. You look at a chart of the S&P 500 and see wealth growing. I look at the same chart and see the electrocardiogram of a patient on amphetamines, running a marathon with his throat slit. He's still running, but there's no blood in him anymore. It's called comfort anesthesia. You've been injected with financial Novocaine. You've lost your sense of risk. You've forgotten that the market is a place where you can lose everything. The words bear market, recession, and crash have become the stuff of history books, things that happen to stupid people in black and white newsreels, but will never happen to you. After all, you have diversification, you have a reliable fund, you have a 401k pension plan. Wake up. You own nothing but a digital ledger entry that says you own air. The system you've been lured into resembles an inverted pyramid. This entire gigantic structure, valued in the tens of trillions of dollars, rests on a tiny apex resting on shifting sand. All the growth of recent years has been driven by just 7 companies. 7, not 500, not 1,000. 7 tech giants are carrying the dead weight of the rest of the economy. If you remove them from the equation, the market hasn't grown in 2 years. It's rotting. But the indices hide this rot. The indices average the temperature of the hospital, mixing the heat of a dying person with a fever with the cold of a corpse in a morgue, and give you a comfortable 36.6. Everything is fine, the app on your phone whispers. We care about your future, sing the bank commercials. But beneath the surface of this idol lurks a mathematical time bomb, and the timer is already ticking. Tick, tock, tick, tock. Do you hear that sound? It's the sound of 2026 approaching, the year when mathematics will finally take revenge on marketing. The problem with passive investing is that it only works one way. It's an escalator that only goes up. The mechanism for entering the market is perfectly calibrated. Pressing the buy button is easier than ordering a pizza. Billions of dollars pour into this funnel every month, inflating asset prices to absurd, astronomical levels. Price-to-earnings ratios are at levels that once predicted only one thing, the Great Depression. But no one looks at the ratios. Everyone looks at their neighbor. My neighbor bought and made money, so I should too. The herd instinct is the most terrible drug. But no one, absolutely no one, explained to you how the exit mechanism works. You've been told the market always recovers. You've been told, just wait out the dip. That's a lie, a criminal, cynical lie. The market only recovers when there are buyers, when there's someone willing to put their hands out and catch the falling knife because they think the price is right. But in a world where 90% of participants are passive zombies, there will be no buyers left. The moment the music stops, the moment the first major fund decides to take profits, or the moment a geopolitical shock strikes a nerve, all those millions of people in the theater will simultaneously rise and rush for the exits. Everyone will simultaneously hit the sell button. And here you will learn the terrible secret that has been hidden from you. You will learn that liquidity is a myth, that the price on your screen is not money. It is simply the last trade made by someone else. It is a ghost. As the crowd rushes to the exit, it will become clear that the door is narrow. So narrow that only one person in 1,000 can fit through. And what will happen to the remaining 999? They will be crushed. Their capital, accumulated over decades, will turn to dust in a matter of hours. Imagine a crowd at a stadium. As long as everyone is sitting, everything is calm. But when one person shouts, "Fire!" rational, polite people turn into wild animals. Passive funds operate on an algorithm. If investors withdraw their money, the fund is obligated to sell shares. Selling shares pushes the price down. The price drop scares even more investors. They withdraw even more money. The fund sells even more. It's a death spiral. It's an avalanche that begins with one careless move and ends by wiping out cities. And in this avalanche, you are not a spectator. You are the snow. 2026 will be the year the illusion of safety bursts with a deafening bang. This won't be just a correction. This won't be just a bear cycle. This will be a functional failure of the market structure itself. Cars that have been bought for years will start selling, and they have no feelings. They have no pity. They have no hope that everything will grow back. They have only an algorithm. The price falls, sell. The price falls further, sell faster. You will find yourself in a trap you built with your own money. You yourself paid for the rope with which you will be hanged. You were sold a ticket on the Titanic, assured that icebergs had been legally abolished. The orchestra is still playing. The champagne is still foaming in the glasses. The waiters are still serving caviar, but the hold is already waist deep in water. And the rats, those very same insiders, the very same smart money you despised for their pessimism, have long since launched all the lifeboats and are quietly rowing off into the darkness. And you remain. You and millions of other passive investors, confident in a bright future, you sit in a comfortable chair, munching popcorn and staring at the green line. But if you listen closely, you can hear the creaking of hull rivets over the hum of the air conditioner. The sound is getting louder, and soon it will drown out everything else. Let's come down to earth. Let's step out of the cozy movie theater and into the cold, concrete basement where the engine of this machine actually works. There are no carpets here. It smells of ozone from overheated servers and fear. To understand why 2026 will be your financial scaffold, you need to disassemble the market's mechanics. You need to see what exactly is broken. Most people think of the stock market as an auction. A crowd of people. One shouts buy, another shouts sell. They shake hands and a price is born. This is a beautiful romantic lie from 20th century textbooks. Today's market is not an auction. It's a morgue where robots pretend the corpse is still breathing. The keyword you should burn into your subconscious is liquidity. It's the ability to quickly convert your assets into cash without losing value. Liquidity is the lifeblood of the market. As long as it circulates, the patient lives. But the truth they're hiding from you is that the blood has long been drained. It's been replaced with a synthetic solution, a computer simulation of life. In the old days, when you wanted to sell a stock, there was a human on the other end of the line, a live market maker. He took the risk. If the market fell, he was obliged to buy to maintain order. He was a shock absorber, a safety net that cushioned the blows. Today, market makers don't exist. They've been replaced by high-frequency trading algorithms. These are programs that execute thousands of trades per second, creating the illusion of frenetic activity. They trade against themselves, shifting candy wrappers from their left pocket to their right, inflating volumes. You think the market is full of buyers. You look into the order book and see dense rows of orders, but it's a mirage, a hologram. As soon as the market smells of smoke, as soon as volatility soars above a critical level, these algorithms simply shut down. They're coded to disappear at the first sign of trouble. They won't catch your falling stocks, they'll evaporate, and at that moment, you'll find yourself in a vacuum. You'll scream, "Sell!" But all you'll hear is silence, and the price will plummet into the abyss, meeting no resistance until it hits the concrete bottom. The situation is exacerbated by the fact that the market structure itself has become a grotesque mutant. Look at the anatomy of the S&P 500 index. It's no longer a list of the 500 best companies in America. It's the head of a hydrocephalus on a thin, degenerate neck. 7 tech giants have swollen to such proportions that they account for almost a third of the entire index. This is a monstrous, suicidal concentration. You think you have a diversified portfolio? You think you've put your eggs in different baskets? Nonsense. You've put all your eggs in one basket, placed it on the edge of the abyss, and are dancing alongside it. When passive funds receive your money, they are obligated to buy these 7 companies, regardless of their price. Are they expensive? I don't care. Are they insanely expensive? I don't care. The robot buys. This creates a self-fulfilling prophecy. The more money comes in, the higher the Magnificent Seven rises. The higher it rises, the more weight it takes in the index. The more weight it takes, the more money the robot is obligated to invest in it on its next pass. It's a vicious cycle. It's a cancer that consumes all the body's resources, killing the other 493 companies. Look at the small cap companies. They're already dead. They're suffocating without capital because all the oxygen is going to the top, to the giants. The market has become like an inverted pyramid, balancing on its apex. It only takes one click, one gust of wind, for this structure to collapse. And that click is inevitable. The problem with passive funds is that they're stupid, literally. They have no intelligence, no fear, no greed. They just function. If you bring in money, buy. If you take money, sell. Now imagine what will happen when panic sets in. When the baby boomer generation, now facing retirement, starts withdrawing funds en masse to pay the bills. Funds won't ask, is this a good price to sell? They won't analyze the fundamentals. They'll simply hit the sell everything at market button. Imagine a giant truck speeding down a mountain road. There's no one at the wheel. There's a brick on the gas pedal. That's passive investing in growth. Now imagine this truck hits a cliff. The brick is still on the gas pedal. There's no braking mechanism in this system. When the sell-off begins, robots will sell Apple, Microsoft, and Google shares by the millions per second just to give people their cash. This will crash the price. The price drop will trigger stop-loss orders on other robots, triggering a new wave of selling. In the 21st century, a crash won't last for months, like during the Great Depression. It will happen in days, perhaps even hours. Liquidity will disappear instantly, like water in a toilet when flushed. But there's another level of deception they've forgotten to tell you about. The deepest basement of this hell. Are you sure you own the shares? Have you seen your name on the shareholder register? Of course not. You see the numbers in your broker's app, but legally, you own nothing. In the modern financial system, there's a layer of control that 99% of investors haven't even heard of. It's called C&C. It's the nominee holder of virtually every stock in America. Your ownership rights are a chain of obligations. The broker owes you, the depository owes the broker, and the real certificate is somewhere in C&C's safe. In calm times, this system works. But at the moment of systemic collapse, when brokers start going under, you'll suddenly discover that you're not a business owner, but simply an unsecured creditor of a bankrupt company. You'll line up for your money. And that line will be very, very long. And so we come to the main paradox. The safer you think the system is, the more vulnerable it is. The lack of volatility in recent years isn't a sign of health. It's a sign that the spring has been compressed to the limit. The energy that should have been released through small corrections and crises has been building up for years. It's been pent up under the tight lid of central bank manipulation and passive flows. The pressure inside the cauldron has reached thousands of atmospheres. The walls are already vibrating. Bolts are already breaking. And you're still standing next to the cauldron, warming your hands, delighted by how warm and stable this thing is. 2026 will be the moment the lid blows. It won't just be a drop in stock prices. It will be a deconstruction of the very belief that markets work. You'll see assets considered risk-free lose 50% of their value in a week. You'll see real estate funds closing their doors and putting up signs that read, "Withdrawals temporarily suspended." This is already happening with private funds like Blackstone. These are the first cracks in the dam. The water is already leaking. Smart money is already building arcs. and a crowd of passive investors continues to buy tickets for a cruise heading straight into the eye of the storm. The cannibalism mechanism has been triggered. The market can no longer grow organically. It can only consume itself. For one major player to cash out, they need thousands of smaller players to enter the market. They need your liquidity to close against. You are not investors. You are fodder. You have been fed profits all these years, only to be slaughtered at the right moment. And that moment has already been calculated mathematically. It approaches with the inexorability of an express train hurtling toward a man tied to the tracks. And that man is you. It's Tuesday, October 2026. Remember this day. History books will mark it with a black border as the day mathematics finally uncovered the cost of human greed. The morning begins deceptively quiet. No sirens, no thunder from the sky. The sun shines as always. You wake up, make coffee, and pick up your phone to check your brokerage account balance with a familiar gesture. It's a reflex honed over the years. See green, get a hit of dopamine, go to work. But today the app won't open. The loading wheel spins. A second, 10 seconds, a minute. Error connecting to the server. You reboot the Wi-Fi. You switch to the mobile network. Same thing. A slight chill runs down your spine. This isn't a technical glitch. This is the first shockwave of a tsunami that has already washed over the coast while you slept. It all started 4 hours before you woke up, during the Asian session. Somewhere in the depths of the Japanese debt market, or perhaps at a US Treasury bond auction, a beam cracked. Someone big, a sovereign wealth fund or a systemic bank, tried to cash out. They needed cash. Fast. A lot. Billions. In a normal market, this would have simply caused a drawdown. But in a market where 90% of participants are passive zombies, there were no buyers. The seller's algorithm placed an order. Silence. It lowered the price. Silence. It dropped the price by 5%. Nobody bought. And then a chain reaction began. The robotic market makers, seeing the anomaly, did what they were programmed to do. They pulled the plug. Liquidity evaporated instantly. The market turned into a vacuum. By the time the New York Stock Exchange opened, the panic was palpable, thick as fog. You finally log into the app, and what you see makes your heart skip a beat. Everything is red, not just red, bloody red. The S&P 500 index has plunged 7% in pre-market trading. Trading has halted. The first layer of defense, the so-called circuit breaker, has been triggered. The exchange has hit pause, trying to give people time to cool off. Naive fools. Do they think a pause will calm the crowd? A pause in a burning theater doesn't calm. It makes people realize they're trapped. In those 15 minutes of downtime, millions of fingers have hovered over the sell button. Fear has turned to primal terror. Trading resumes. And then what I warned about happens. The avalanche breaks loose. All those trillions of dollars that have been flowing into passive funds for years are now trying to leak back out through the eye of a needle. Index funds are required to sell. They have no choice. Their charter states follow the index. If investors take their shares, the fund must sell shares to pay back the money. The fund dumps blocks of Apple, Microsoft, and Amazon shares onto the market. But to whom? Who will buy a falling knife when everyone knows it will be even cheaper in a minute? There are no buyers. The price plummets in free fall. Minus 10%, minus 13%. Trading halts again, second level of defense. The exchange pulls the switch again, trying to stop the bleeding. But this is no longer bleeding. This is a fountain from a severed artery. At this point, you finally understand the essence of the ETF trap. You see how the price of your fund's shares begins to diverge from the actual value of the assets within it. It's a scary term. Discount to net asset value. In theory, it shouldn't exist. In practice, in a panic, it reaches 20-30%. You want to sell your safe fund. You submit a market order, and the system executes it at a price half the one on the screen a second ago. You just lost half your life savings with a single click. But you're lucky. At least you're out. Most people just see a message. Trading for this instrument has been suspended by the administrator. Your money is locked up. You watch the screen like the captain of a sinking submarine watches the depth gauge. The numbers are changing, but there's nothing you can do. You no longer own your capital. You're a spectator at your own funeral. The media is going hysterical. TV channels are cutting off broadcasts. The talking heads who yesterday advised buying the dip now sit there, ashen-faced, muttering something about a technical correction and fundamental strength. But their eyes are darting. They know the truth. They know this isn't a correction. This is a margin call for the entire planet. Hedge funds, which were playing with leverage, are starting to burst like bubbles. Their assets are being forcibly sold by banks, which puts even more pressure on the market. Gold is falling along with stocks because investors are selling everything they can to plug the holes. Cryptocurrencies, which promise to be a safe haven, are doubling in an hour because they are also a risky asset, and in a fire, everything burns. By lunchtime, the third phase begins. A complete halt. The exchange closes for the day. The terminal screens freeze on the final numbers. minus 20% in a single day. That's more than Black Monday in 1987. The silence that hangs over the financial world is deafening. It's the silence of a cemetery. Brokers' phones aren't answering. Banking apps are down. You go outside. The world around you seems the same. Cars drive by, birds sing, but you feel the earth tremble beneath your feet. You know that tomorrow, when the markets open again, if they open, the bottom will be even lower, because only the fastest ones sold today. Tomorrow, pension funds will come selling. Crowd psychology operates according to the laws of physics. The inertia of fear is stronger than the inertia of greed. Years of quiet growth, years of buy and holds, all of it worked only because everyone believed in a fairy tale. In 2026, faith died. And without faith, paper money turns to paper. Electronic money turns to zeros. You're sitting in the kitchen, staring at your cold coffee, and you realize the prophet was right. You were told the market always comes back, but you weren't told that. Before it comes back, it might take everything from you. You were told time is on your side, but time is up. Emergency meetings of governments and central banks begin this evening. They'll promise support. They'll say they'll print trillions more. They'll announce a ban on short selling. They'll try to patch up the hole in the Titanic's hull with a Band-Aid. But the market is a beast that smells fear. The market knows the kings are out of ammunition. Rates can't be lowered anymore. Inflation won't allow it. Money can't be printed. The debt is already prohibitive. The system is left alone with its illness. And the illness has entered its terminal stage. It's not just a drop in stock prices. It's a collapse of confidence. On this day, the concept of passive income dies. Millions of people who plan to live on dividends suddenly realize they'll have to go back to work. But where? Companies whose stocks have collapsed will begin mass layoffs tomorrow. The economy grinds to a halt, like an engine that's been filled with sand while running at full speed. You look out the window at the evening city, the lights are on. But you know, these are the lights on the deck of a ship that's already listing. And there aren't enough lifeboats for everyone. There aren't enough for even 1% of the passengers. When the dust settles, the worst thing isn't the screams. The worst thing is the silence. After the chaos, after the panic, after the last sell orders have been executed at rock-bottom prices, a heavy, viscous silence hangs over the financial world. It's the silence of a battlefield where the carnage is over and the looters have begun their work. You look at the ruins of your portfolio, the pitiful remains of what you called a secure retirement, and ask yourself the same question. Where did the money go? You think the money has evaporated, vanished, burned in the flames of the crisis. But this is a naive illusion. In nature, nothing disappears without a trace. The law of conservation of energy applies to economics too. Your money hasn't disappeared, it has simply changed hands. What happened in 2026 will be called by historians the greatest transfer operation in history. While you and millions of other passive investors were panicking and hitting the sell button, dumping their assets for next to nothing, they were on the other side of the market. Those same predators you were told you were afraid of. Those same active managers, hedge funds, and family offices of old dynasties who had been sitting on cash for years, waiting for this very moment. You were selling Apple shares at a third of the price because you needed to pay your mortgage. And they were buying. They were putting buckets under that bloody waterfall and filling them with your assets. For them, the crash wasn't a catastrophe. For them, it was Black Friday, the epic sale they'd been preparing for a decade. Imagine a savanna after a drought. The weak animals have died. The herd of herbivores that mindlessly nibbled the grass, that's you, passive investors, has thinned out. And now the vultures and hyenas come into play. It sounds cruel, I know. You want justice. You want the government to step in, reverse the deals, and restore everything to the way it was. But the market is not a court. The market is a biological environment. It is a mechanism of evolutionary selection, where capital flows from weak hands to strong, from the impatient to the patient, from the blind to the sighted. Passive investing was an attempt to cheat evolution. An attempt to prove that a sheep can survive among wolves simply by closing its eyes and pretending to be part of the landscape. 2026 will prove otherwise. A sheep is still food. The aftermath of this collapse will redraw the social map of the world forever. The middle class, that sacred pillar of Western democracy, will be destroyed. The concept of retirement at 65 will become as archaic and forgotten as steam engines or homing pigeons. You won't retire. You'll work until your last day, because your savings, which were supposed to feed you for 20 years, have turned to dust. Pension funds, which were also sitting in indices and bonds, will announce payment restructuring. In human language, this means we owe you nothing. This will be the era of a new feudalism. The rich will become super rich, buying up real assets, factories, land, technology, for pennies. And the poor will be left with memories of how beautifully the graph rose in 2024. You've been told, timing the market is more important than timing your entry. Marketers coined that phrase to keep you from selling, to keep you holding onto their assets while they sell out. Now you see the value of that wisdom. In reality, time is your enemy if you're in a sinking boat. 20 years of savings can be wiped out in 2 weeks of decline. The math of recovery is brutal. If you lose 50% of your capital, you need to earn 100% of your return just to break even. And where are you going to get 100% of your return in a world in ruins, where the economy is in recession and the stakes are high? It will take you decades just to rebuild. You don't have those decades. Your life is finite. Time is up. But the most terrifying discovery awaits you. You'll understand that the system itself was designed for this end. Indexes, ETFs, robo-advisors, it was all a giant cattle pen. You were herded together to make shearing easier. You were trained to be lazy. You were taught not to think. You were deprived of your instinct for self-preservation, replaced with a belief in historical returns. And when the pen gates slammed shut, you didn't even understand what had happened. You believed until the very end that the Fed would save us, that the authorities wouldn't allow it. You forgot that a life preserver is thrown only to those in the boat with the captain, and you are the ballast. You are the liquidity that was dumped to keep the ship afloat. Now look at the calendar. The clock is ticking. Tick, tock. 2026 is not an abstract date. It is a wall our train is hurtling into. You have very little time left, maybe 18 months, maybe less. The window of opportunity is closing with each passing day. Now, while the music is still playing, while the crowd is still euphoric, you have a tiny chance. A chance to stop being passive. A chance to walk out of the theater while everyone else is watching the screen. It takes courage. It requires a willingness to go against the crowd, to endure the ridicule of friends who will rub their paper profits in your face. You'll have to get proactive. You'll have to learn what real value is. You'll have to seek out assets that don't rely on the printing press, gold, land, commodities, businesses that produce real things for real people. You need to leave the casino before the dealer changes the deck, because the next hand will be a stacked one. The smart money is already leaving. Look at the insider reports. CEOs and owners are selling their shares at record rates. They know something you don't. They're cashing in. They're building bunkers. What about you? Are you still setting up auto funds for your brokerage account? Don't say later you weren't warned. Don't say it was a black swan that no one could have foreseen. It's not a swan. It's an elephant in the room, trumpeting right in your ear. The system is broken. Liquidity is a myth. Passive investing is a trap. The ending to this play has already been written, and you won't like it. Let's return to that movie theater from the beginning of our story. The screen is dark. The lights are still off. The theater is dark and cold. You sit in your seat, clutching a ticket that's now worthless. Empty seats surround you. The smarter ones left half an hour ago. The dumber ones are trampled at the exit. You're left alone. An empty popcorn cup and a crumpled brochure with the headline, "Invest in the Future with Us," lie on the floor. The wind blows this debris down the aisle. Somewhere in the distance, a siren wails. The movie is over. Welcome to reality.